Guys, I don't know how you see it, but things aren't looking too good right now. Feel free to share your opinion in the comments. We've talked about this again and again in the last videos. The current target level, we've now reached the first one here. And Bitcoin is now also broken down in the daily candle with a very strong volume candle. So the bear flag was broken to the downside. The question is, will it stay like this or will we actually see a recovery? And was this just a fake out similar to what we had here, for example? That still remains to be seen, but as we've discussed, Ethereum has already broken out of its flag to the downside. For me, there's still a possible recovery level in case it doesn't continue to crash, but I see a rejection level here at this Fibonacci retracement zone between about 2140 and 2185. That would also be a retest of this resistance, meaning this flag, which could then possibly lead us to lower prices. But for now, let's stick with Bitcoin because there are quite a few things to keep in mind. We will also take a look at level 2 data. What did I see? Namely, an incredible number of orders here. Even right now, there are an incredible number of large orders open and they're long. And this looks really interesting here because the orders that have already been filled currently amount to $3 billion US, and we're not talking about a lot, but only about this small price range that we have here from 73,000 US dollars down to 71,700. So exactly this small range that we see here is already filled with $3 billion US at the moment. But now it's important to be cautious. I'll get to that in a moment because I want to point something out regarding the last big surge in the past. But we can also see here, sell orders currently don't even amount to $1 billion US, at least in the range we have here. We would probably have to expand the entire range a bit to see how many more sell orders are included. But even here, it's actually not much. It's roughly $1 billion US, whereas now in this case, when I expanded it, there are about 3.5 billion in buy orders. And why is that so dangerous? Or why do I personally see it as dangerous at this point in time? Think back to how we kept rising here. We kept getting new sell orders coming in. What happened? All the sell orders built up new liquidations and then kept getting liquidated again and again. But I'm not staying bearish now, even if we have a breakout to the downside. I want to show you two bullish possibilities as well. Despite everything, if we take a look at the liquidation heat map over the last 3 days, it looks very interesting because we've triggered liquidations. Here once again as well. But you can see it even better on a weekly basis that we've just now dipped into an incredibly strong liquidation cluster. Maybe this is really just a fake out at the moment. We're triggering these liquidations and might then go on to trigger the ones above up to 75,000 US dollars or even 77,000 US dollars. We'll see about that, but we do have some bad news. The war has more or less started again. Despite the ceasefire, the USA has now attacked Iran again, and of course this could lead to a renewed escalation. But what am I getting at here in this context? If we look at this now, we should actually say, hey, with so many liquidations lying here, that should lead to an increase. And yes, that's always my opinion too, that we move from liquidation to liquidation. Now we have to be careful because of the breakdown. And if we go in here now and simply increase the time frame of the liquidation heat map, then I also want to show you the following. At the moment, in various time frames, it actually looks like we should be going up. That means here $78,000 to $79,000. Super interesting on the 2-week chart. Let's switch to the 1-month view and take a look at it here. And that also still looks very interesting because we now have large clusters in the area we've just entered, plenty of clusters above us, and then we see this $79,000 and $83,000 or so, where there's still quite a bit lying around. But then it gets exciting when we look at the 3-month time frame. And then you really have to ask yourself, hey, if we now enter a bearish scenario, we should keep a very close eye on this liquidation heat map. And I see the 70,000 US dollar mark as super interesting here because we're really not that far away. Right now, the price is below 72,000 US dollars. That means just another 2,000 US dollars down, and we would already be hitting this liquidation cluster here. And then the question is that enough as support? Because if we look in here, we have around 70,000 US dollars, a very strong order volume cluster, and in that area, just a bit below, the 0.786 Fibonacci level would also be located. And purely based on this liquidation heat map, even though we do have quite a bit above us in the smaller time frames, I would still be cautious. That doesn't mean it has to go down here, but if it does go down, we know 70,000 is very interesting. And after that, the price ranges of 65,000 to 62,000, and just a bit below that, there's currently a really large cluster. We must absolutely not lose sight of that, and that will be very exciting for me if it does drop that far. Now I've said enough bearish things. I want to show you something that could actually lead to a bullish reversal now. Despite the fact that we've had a breakdown from this flag, if we simply ignore this flag chart pattern for a moment, we would now have the following possibility. Still interesting to me, a small pattern on a lower time frame, which is why this 68,000 zone can also be considered very interesting. But what we have here is simply nothing other than what I've drawn here. These red boxes here represent the 0.618 level. Currently, you can also see again how perfectly we have reacted right here at this point in time. Let's wait and see if it stays that way and whether we can actually recover back into the flag. And then comes the 0.786 Fibonacci. And the 0.786 Fibonacci would coincide with the second one. I know those who have already seen it are familiar with this, but from the target zone at the top, which we reached, I don't want to draw it all out again now, but this was the box I showed here. The 1.618 Fibonacci was hit exactly. After that, there was the sell-off. And if we take a closer look now, the 0.786 and the 0.618 are really almost perfectly aligned here. And that's why, for me, this is a possible target level that I see as likely if we really continue to fall, where the next major reaction could occur. And what else would support this? And for that, take a look at this on the 4-hour chart. Here, in this area, if we draw it in now, we actually have a small bear flag here. No matter how bullish you might be at the moment, you have to look at the chart neutrally. And I always say that. But we've actually formed a kind of bear flag here. And if we now take this as a target level, where would this bear flag have its target level? That would then be roughly at the 0.786 Fibonacci. So exactly this price target zone if we really play it out completely. That's why for me, this is a new super interesting level to get the lowest possible entry price for a new long position. But if I enter this long position, it won't be a full swing long position for me. Instead, I'll compare everything again with the Fibonacci levels, and depending on where we go, if it comes to that, you can already see that the 0.5 Fibonacci is a very, very, very interesting level. What could that mean if we really go further down and reach this level? It could mean that we might see a recovery exactly in this area here, maybe even up to this flag, so that we have it as a retest and possibly then a rejection. And that's why I would try to take this long position here and then go short again here in order to trade a possible further sell-off. That's what the current situation looks like for me right now. And what do I want to point out again? Because as I mentioned earlier, during this entire rise that we had, and I can extend this a bit further, and we must absolutely not forget this, this is what I mentioned at the beginning of the video. We went up, people kept going short here. You can see it here as well, went heavily short, liquidations were triggered. People went short again on the way up, and these short positions kept getting liquidated the whole time. And again here you can see it, an incredibly high cluster of liquidations because people kept shorting the whole time. It actually took over a month until all the traders' shorts finally worked out. And what is happening at this point in time? Basically nothing different except that what we did earlier with the shorts is now being done with the long positions. Apparently people have become too bullish and have not respected higher level price levels, as we have repeatedly discussed, and also placed short positions here, as much as one actually should on such a larger time frame. And that's why at this point I don't really see anything different happening, except that all the new long liquidations coming in here might also continue to be triggered. And that can also happen to us in this area now, and depending on how many new long liquidations come in, gradually the probability is of course very high that these will keep getting taken out of the market until at some point, as we saw here, the market finally says, okay, now we're turning around. But in this case, the question is, how far will we fall before we really see a reversal and the bulls outweigh the bears again and show more strength? Now, just very briefly to wrap up, because I mentioned recovery levels and possibly a rejection, maybe we really should right now in this bullish structure, which is still active overall. So as long as we don't break this low, I still see this as a possible bullish structure with 0.618 as a possible continuation, or even 0.786. Maybe we'll actually see something like that, and that would be the possibility of a bullish continuation, as long as we find support at 0.786 and then really move up. And even more important would be not to break below exactly this area here. Exactly this low that we have, because that was our last higher low on the higher time frame. And if we break below around 65,000 US dollars with a candle close, then I actually see a move towards these lower prices here in the range of 53,000 to around 48,000 US dollars, where over a 2-year period there are still an incredible amount of liquidations lying in wait. I'm talking about nearly 80 or 100 billion here. I'd have to take another look at that. If I repeat that per subscription with the liquidation heat map, then we'll analyze it together again, and accordingly I'd of course appreciate it if you subscribe, leave a like and a comment under this video. Then in one of the next videos I'll show you the 2-year liquidation heat map, highlighting at which low prices we still have really large liquidation zones here that could potentially form a bear market bottom. With that in mind, see you next time.